to Artlist.io and get the best music and sound effects for your videos. This is not.
Okay, testing. Oh, 1, 2, 3. G'day, mate. How are ya? Hello. Who's ready for some Forex? Can I shed some light on Traders Way Islamic accounts? Why don't you contact customer service? All right. Alrighty. Okay, welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders stationed all around the world. We gather here approximately 8 a.m. in the morning, New York time, 90 minutes before the stock market open, to align the satellites, synchronize our watches, and be prepared for the creating trade plans for today, tomorrow, next week. So thank you for being here. Thank you for being a subscriber. Thank you for being someone that watches every day, takes notes, clicks the thumbs up button to let the YouTube algorithm know that this is quality content. And of course, your positive energy. Let's go. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All right. Good to have you here. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com, a boutique foreign exchange trading firm that would like to earn your loyalty and respect, and they're doing so through education. See, it's a symbiotic relationship. They believe if they invest into your education first and you become a client trading real money, you'll actually survive. See, most brokers, they don't care if you blow up your trading account. You pop in $500, they trade against you anyways. You're 90% chance you're going to lose, so they B-book you. And you blow up your trading account, you go away, they keep your $500. That's a really stupid business model. Instead, Traders Way says, you know what? We want our clients to survive and thrive. We want them to be successful and profitable and happy. And that's my job. So if I can teach you how to trade, maybe through that, you'll open up a live trading account at TradersWay.com. And maybe, just maybe, you'll have the skills and capacity to trade profitably for weeks and weeks and weeks, months and months and months, years and years and years and years. They'll provide an execution service through their liquidity partners on your behalf. Fast execution speed, low spreads, pay you the full swap. You're happy and tickety-boo. They're happy and tickety-boo. And the world is a better place. Thank you, TradersWay.com. Okay, so welcome. All right, what are the market conditions? Is that a trend? Is it up, down, or sideways? What's the trend? Okay, so what's the problem? There's no problem. Yeah, you should be range trading or not trading. Well, what about your pivot points? Those are trend tools. What about Fibonacci? Those are trend tools. Think about it. Would you buy a Fibonacci? Would you buy a 50% Fibonacci retracement in a trend? Yeah, Fibonacci is a trend tool. Would you buy a 50% retracement in a range? No, that'd be dumb. Now, you can buy in here if you believe we're going to break out in trend, but that's a pretty strong belief system. So just be careful is all I'm saying. Okay, a lot of people get caught into trading a belief system without confirming anything. A lot of people seem to be trading a bias without technical analysis. Right? You got to be careful. Do you understand? You can't be all narrative and no technical analysis. Okay? So you got to be careful. Just look at that. Is it trending? No. Then why are you trend trading? Okay. Now, do we have a belief that says by the end of June we're going to be up here? Yeah. Yes. So you reaffirm your belief system. Why do you believe that? And then you say, are the market conditions conducive for taking those trades? Well, what do we talk about with technical analysis? Well, if we're going here and you're using a monthly swing, this was a buy and this was a buy. This is kind of why I have it highlighted for you. Great, cool. Okay, do you buy up here? No, that's where bears will sell. Cool. So basically, we're buying at 41 and someone else is selling at 42. Not a complicated matter. What do we do today? Well, if you are a bull, you can try to buy a day trade here. But because we're in the middle of the range, you got to understand it's sort of like a meh trade, right? It's meh. You could do it, but don't lose a lot of money doing it. And if you're going to do it, double check. Is the pound the right vehicle? Could be. It might not be. But just look at where we are, okay? Analyze. Think about it. You got this. Okay? Okay? Yeah, Brinsley, I did respond 2 days ago. Okay? One of the things I asked you is, are you using a different broker? Because different brokers are going to have different server times. That could explain it. But I'm using the same as you, Brinsley. So you're either using an ECN and I'm using a variable, or you're using a fixed spread and I'm using a variable, or you're using a demo and I'm using a live, or you're using one broker and I'm using Trader's Way. And there's, right, a lot of different things that could do it. But you and I, yeah, okay, so that could be it right there, Brinsley. So you're on an ECN on MT5. I'm on a VAR on MT4. So that could be, there's a difference in those pricings. Okay? But I assure you, we're using the same algorithm. Okay? Also, by the way, Brinsley, the charts you showed me, they looked very tradable in my opinion. So one of my concerns, not just you, for everybody. One of my concerns is that people have stops that are too close and they move their stops too quickly. Sometimes it's because there's no conviction in the trade. And I'm not saying that's you, Brinsley. I'm just speaking to everybody. But very often they're over leveraged. Okay. I often don't move my stops to break even for 1 or 2 days. Okay. So I saw some, when you sent me your charts, you're like, hey, our trades don't line up perfectly. Or our pivots don't line up perfectly. I looked at those charts. I'm like, okay, even if they don't line up perfectly, those are good trades. There are trades there. Those are winning trades. Okay. Even if your pivots don't line up with mine, I still saw very decent trades. Okay. So try not to get too caught up in the tools, but understand your concern if mine are different, but you're using a different tool than I'm using. You're using an ECN on MT5, and that might describe slightly different pricing. Okay, and it'd be more dramatic if you were using a different broker, just because they're different liquidity partners, different server times, different opens and closes, different rollovers. Okay. Like one big one would be if you had a Swiss trading account, their rollover is hours before New York time, time zone based. Or if you're in Asia, the rollover is a much different time. Okay. But I did respond, Brinsley. All right. Cool. Now, another thing, Brinsley, if you log into MetaTraders today, run the MT5 auto installer. I've had every single file in the installer reviewed, and in most cases, reprogrammed. Every indicator, every EA, every template was looked at, cleaned up, or reprogrammed. So rerun it and see if that helps. Okay. And the cool thing is, even though it took a lot of time and effort, there's no additional fee. Yes, it's an auto installer. You download it, takes literally 2 seconds. Then you run it and it does all the work for you. Okay. You did it again, Jimmy? Yeah, I noticed that. So, and did it work fine for you? And thank you for doing that, Jim. I appreciate that. Yeah, cool. Yeah. Okay, cool. And our good friend Kishore was the one that went through file after file. Hundreds of files, guys. Hundreds of files. He went through it file by file by file by file by file. Took a very, very long time. Took a lot of patience, took a lot of discipline, took a lot of programming skill to then find one of the indicators that might be working on MT4 but doesn't work consistently on MT5. So he's got to break it all down and reprogram it and repackage it and test it and then compile it. And so what a great honor it is to have a guy like that in our community. So thank you to him as well. Okay. FT9 says sometimes you can find a difference in the day trading bias template and the daily pivots. It might just be calculations in the algorithm creating it. So one day trading. So like I don't know, let's say Wyatt pivots versus my biased pivots. I forget what we used, but most likely it was something like yesterday's high, yesterday's low, right? Yesterday's close. Okay. You add those together. Okay. And then you divide that number by 3 and you get the central pivot and then so on and so forth, where Wyatt might be doing something similar, but slightly different, or defining the high. Okay. On a day, what hour is that? Okay, the week is right. Now, how about for the week? Does the week include Sunday, or does it wait for the Monday 12 a.m.? Okay, these are just slight discrepancies. Okay. Okay. Is that right, FT9? So maybe the new version is more accurate. Okay. So anyways, what I'm looking at here, I'm using the biased pivots here. Okay. And we're suggesting, the pivots here are suggesting this mid-level might be important. They all run on everything. MT5, yes. Okay. That's right. Oh, yes. So somebody asked this one. All right. So indicators, custom, price action pivot points are, yes, they are included. I can't remember if they're in the complete package or just the $5 package. I don't recall, to be honest with you. But it's in, you know, if you buy the complete package, of course it's in there. I can't remember. Okay. But yes, that new tool is included. It's not in the individual download section, but it is in the auto installers. Okay. So that is included. And this is a proprietary indicator that I had developed. And yes, I included that for free. So, and you know, this costs money. You know, when I do things like this, it costs money, you know, real money. So I've spent the money, and you can have it for no additional cost. You're welcome. Okay. So anyways, what we're looking at, if you look at this channel, is there's a slight tint of bearishness since, the 31st of May. Sure are. Salim says it's not in the $5 package. Okay. Okay. I'll update the video and say, includes this and that kind of stuff. But yeah. Yeah, I have a picture of Wyatt at like the 2009 Traders Expo at like Las Vegas, and he sat down and in a trading contest with Interbank FX, IBFX, in their trade show booth, and then all these traders are there, and there's a group of boot campers around him, and he's trading against the other 9 traders, and he won, and we're like, yeah. So so we cheered him on, and I took a picture of his badge because he took off his conference badge and he put it next to the award. He was the #1 trader. It was pretty funny. Yeah. Cool. Yeah, and that is right. Daniel says, when you're doing pivot points, it is just math. And you can do it quite quickly because, you don't have to be a rocket surgeon. So the rough and dirty is here. Let's say this is a low and this is a high. I know it's not 1 day, but let's say we're doing 3-day pivot points. It doesn't matter. You look at your low, you look at the high. Now, the quick and dirty is, what's 50%? Can you eyeball 50%? The high and the low? Okay. Could you say, ooh, I don't know, this is 50%? Okay. That's the average. So with pivot points, you have to add one more thing because it's a weighted average. The low, the high, and then the close of the period. Okay, so let's say it closed here, above average close, which means more bullish close than a bearish close. So that would move the central pivot point up a little bit higher. If it closed way up at the top, wow, it was an amazingly bullish period. So that would pull the central pivot up higher. If it closed here, then it would be about average. High and low and close, add those 3 things together, and you'll come out at the 50%. So that would be the average, and the weighted average would be the same because the close closed at the average. Once again, if it closed lower than the average, so you have a low, a high, and a low, well, the sentiment at the end of the period was more bearish than bullish, and that would pull the central pivot down. And if it closed way down here, it'd pull it significantly down. So it's quite easy to eyeball. You're like low, high, that would be the central if it closed a little bit high. Okay? So when you're doing it, like you can't do day trading on them. Right. Okay, so now you would do like this. So you can calculate tomorrow's pivot points, for example. Okay? There's the high, there's the low, and it's a low close, right? So if 50% is about here, it would be a little bit lower than 50%. Oh, that's what it did. You see? The top of that gray box, sorry, the top of the green box is tomorrow's central pivot point. So eyeballing this, I can quickly see that's about right. So a bear has a trade plan like this between now and Monday. Okay? Okay? And what would a bull be thinking? if they wanted to be a bull on this. Okay? You see? Okay. Yes, you are. If you downloaded from MetaTraders a year ago, you still have access. You still have access. Yeah, you can go log right back in. And if you've forgotten your password or whatever, then do it again. Okay. It's one of these things where there is a one-time offer to get the complete toolkit. And people are waiting for, like, I don't know, I guess they're waiting for me to market and advertise to them to get a better deal. Oh, Wayne's going to give me... No, it's literally a one-time offer. I'm probably the only one in the whole world that ever actually gives you a one-time offer. So if you don't take it, but now you regret it, pay the $5 again. Okay? And then accept the one-time offer, which is funny. All right. So here we are. So from a bullish point of view, what you're hoping for is something like this over the next couple of days. And because we're range bound, that's not a good trade. But like I said before, that's a meh trade. It doesn't make me happy. It doesn't make me sad. The next opportunity would be buy at the bottom of the range. So here's how complicated things are. And I hope you're not making things more complicated than they need be. There's 141, 141.50 midpoint psych level, and 142. That's where all the traders are. Okay. So if you're doing stuff in between, you're not even a market participant. You're just getting run over. Whether you're a bull or a bear, it's either dragging you along with it or you're getting run over by a bulldozer. If you're a bull, buying these step-ups is what you should be doing. And if you're a bear, right now you basically only have 42. Now, if you were an aggressive bear, you're going to try to do this. And I'd caution you, we're not trending, so I don't understand why you'd want to be so aggressive. Okay? Because right now there's no indication, technically speaking, that that would work. Right now we're stuck in the middle. I don't really know. I couldn't really tell you. Okay? I couldn't really tell you, technically speaking, whether we're going here or here on Monday or Tuesday. You understand? There's nothing on this chart that would suggest that. Now you might argue and, oh, look at the divergence on my CCI. Whatever, dude. Okay, whatever. This shows a sideways market, and anything that suggests we're going to go above 142 or below 141 is really your bias. So if you have a bias of this going up or down, that's really cool. But if you have a bearish bias, 142 is still your best trade. Okay? And if you're a bull, because of the bullish engulfing here, you can try at 141.50. I just wouldn't have a lot of confidence on it. It would be a nice little day trade. Right, Marina? Nothing wrong with the good old day trade, right? Because you're relying mostly on technical analysis, which is good. So you're like, well, if I were a bull, which is now an opinion, because the market's not bullish or bearish, so that's not, right? It's only opinion to be a bull. But then you're like, and this is a half decent day trade. So you'd take the day trade. Do you load the boat? Do you go for a home run? No, it's just a nice little technical trade. Put it together, drop a stop there, right? And if you're wrong, set up the next trade. So for example, if it dropped below this buy zone, do I buy it again? not until we hit 141, and that might not be till Monday. So I get down to this where I'm like, I might be a buyer here, and by the end of Friday, maybe I get to move my stop closer to break even. Nice. Okay. Okay. Okay, you see it? Okay, now let's leave the technicals alone. I wanted to explore something. I have a vague plan here. Sure. And actually, I want to comment on, Marina says she's done more gold trades than pound lately. Yeah, I want to kind of explore that path. I want to explore something. I don't know how to do it because it's more of a thought that I had. Okay, where should we start? Where should we start? Let's start here. SP 500. Oh, sorry, SP. Oops. This gamer keyboard, it's so fast it doesn't work. Okay. Let's say over the last even 5 days. Okay. Stock market is what? Generally up, generally down, or generally sideways? How would you describe the stock market? This is the last 5 days. Up. In fact, we've hit an all-time high. Yeah, thank you. Jim's right on my thought process. Okay, so there are buyers of the market, right? Okay, that's cool. Oops. Let's take a look at the VIX. Over that period, how would you describe this? Okay. Yeah. So what does that mean? What does the VIX mean? It means professional investors have purchased significantly less insurance against their S&P 500 stock. It's not necessarily risk off. Like Jim, of course, you're right. But what it really is that even though the S&P 500 is at resistance, by resistance, I mean an all-time high price. And we busted through making a higher high, the highest price ever in recorded history. And yet, the amount of insurance bought to hedge those positions dropped, statistically, a pretty reasonable amount at the same time. So what does it mean? They're not very afraid, are they? If they were afraid of the stock market crashing, they would load up on insurance, or they would exit the trades and go to cash. But we know they didn't exit, they bought, and they didn't buy insurance, so they didn't hedge. Ansas, so therefore they're mega bulls, correct. But also new money and less insurance. So tell me about the psychology of the market now. Are they bullish? Are they bearish? Are they moderate bulls or are they aggressive bulls? Are they moderate bears or are they aggressive bears? Describe the market psychology now. Okay? Bullish and how bullish? Bearish or how bearish? Come on, guys. I expect to see hundreds of responses here. What the heck else are you doing? Playing Clash of Clans and listening to me in the background? Let's go. Okay. And by the way, I'm dropping some knowledge here. I'd like to see you click the like button. I am teaching you how to thread knowledge together in a really important, logical way. And I'm not trying to show you I drive a yellow Lamborghini. Okay? Oh, yes. And I have a custom-made watch. Yeah, great. Now you love me. Great. Aggressive bullish. Good, right? Good. So the market seems to be aggressively bullish. Okay? Why opinion? I don't have opinions. The stock market made an all-time high yesterday, and at the same time, the amount of hedging in the market went down. New money in, less hedging. Good. All right, let's follow this logic. Should the dollar be strong or should the dollar be weak? If the stock market is aggressively bullish, the US dollar should be weak. But I would not characterize the dollar as being weak right now. Jimmy says, well, foreign money moving from other countries to the United States to buy the stock market. I think that's what you're saying, Jim. I think your thought process is correct, but not to buy the stock market. And that's what I'm getting to. So I get the logic, hey, we're at all-time highs, somebody's pushing the stock market higher, but I don't believe it's significantly foreigners. It doesn't explain yesterday or last week. The dollar currently is not weak. For the last 2 weeks, okay, you might even argue, okay, hang on, okay, you would argue that it's actually over that last couple of weeks more significantly, statistically more bullish than bearish, but the stock market's making all-time highs. What the hell? The US dollar should be weak. Why is it not weak? And this is what I was pondering in my meditation this morning. Okay, so if you want to continue this exploration, please pay me $300. Ah, you know what? I'll just do it for free. Okay, so let's explore this even further. 10-year T-note yield. Petrodollar and Charlie Cook. Day range. Oh, here we go. Let's say 5 days. All right. So how would you describe now the last 5 days? We looked at the 5 days of the stock market, 5 days of the VIX. How about the last 5 days of the 10-year T-note? What's happening to yield? Up, down, or sideways in yield? from 1.6 to 1.45. Holy smokes. That's huge. For 5 days? Okay, let's talk about this. How do you get that done? What is literally the mechanics behind this? How does the yield on the 10-year T-note drop so significantly in a week? What is actually happening? Somebody is buying bonds. Well, why would you be buying bonds? The stock market's at an all-time high. What the hell's wrong? Why would you buy a bond and lock in 1.5%? So I hear one theory, and the reporters said this: it's a short squeeze. Like the 10-year T-note market is similar to AMC or GameStop. Suddenly everything is a short squeeze. Everything's a short squeeze. Why? Well, look at GameStop. It's a $100 million company. Well, what about the $5 trillion US? It's the 10-year T-note. What are you talking about? But I swear to God, that was the answer. I'm like, wait, maybe it's central banks like the Reserve Bank of India trying to change the exchange rate of their currency by changing the composition of their balance sheet. Okay? Okay? Well, Charlie. So Charlie says front running rates rising. Well, let's talk about their logic of the short squeeze. Everybody knows, and we're all preparing for it right now, for interest rates to go up, which means the 10-year T-note price will fall. So people are already short. So what the reporters are suggesting is people are coming into the treasury market, buying up all the treasuries, pushing up price, and squeezing out the short traders. I don't know. What I don't know. Okay. I don't know. What am I don't know. I think it's probably more like the Reserve Bank of India saying they need to buy some more gold and they need to buy some more U.S. treasuries, because a U.S. treasury on the balance sheet is close to cash. Gold on the balance sheet is close to cash. So the Reserve Bank of India might be taking cash out of their vault, putting it into the interbanking system, thereby lowering the value of the rupee and increasing their competitiveness, or at least counteracting the strong rupee, which is unwanted by the central bank. So at least now they're lowering the value of the rupee while maintaining a balance sheet. So they're just changing rupee for gold, rupee for 10-year T-note, but those are real assets. You can sell the 10-year T-note. It's liquid. You can sell it in seconds. You can sell gold. It's also liquid. Now they're doing bars of gold and stuff, but whatever. It's gold. You can go anywhere and get close to cash. Okay? So, gold, silver, platinum, palladium, 10-year T-note, 5-year note, 30-year, whatever. They're all similar to cash. So the Reserve Bank of India is simply getting rid of exchanging cash for other assets. So now there's less cash in the asset side of the balance sheet, but there's the same amount of gold or the same amount of 10-year T-note on the balance sheet. Okay? And by increasing the supply of rupee globally, they have lowered the value per rupee, which is a policy that central bank would want to pursue. Okay? And I find that much more believable. Okay? I find that much more believable than the 10-year T-note treasury market of $100 billion trillion is being traded and manipulated the same as a $6 stock with a huge short position sitting on top of it. Those two markets are not comparable. Okay. Yeah, no, Charlie, I showed you yield. This is yield, not price. So for yield to go down, there's significant purchases of 10-year T-note. How does India's central bank? Well, it wouldn't just be them, Fund for Life 24/7. But it's the idea that it's to me, it's more likely central banks of countries around the world that are facing currency appreciation because of the reverse of normal cash flows due to COVID-19 closures of their economy. In particular, in emerging markets. Okay. Yeah. More likely. Now, do I know? No, I don't know. Now, are some people counter trend trading the assumed increase of yield, aka falling prices in 10-year T-note as we learn about a taper? Are some trading against those guys? Yeah, totally. But not to that kind of degree. Okay? Not really. So how can you confirm this thesis? Do your best to research purchases by those central banks. So I have showed you in the past the Central Bank of India and the Central Bank of Israel. And I said, look, these central banks are telling us they are, in fact, purchasing significant amounts of gold. And another thing you could buy besides gold or silver is the 10-year T-note. And the thing with buying gold, and central banks do this, but they buy physical gold. And do you understand, like, if Israel decides to buy $1 billion worth of gold and physically lift it from Hong Kong using like Brinks, and then Brinks moves it all the way over. And by the way, every bar has to be assayed, right? Hallmarks checked, assay reports done. Then it has to be lifted under guard and moved all the way to Israel, and then assayed again, of course, and then eventually put into a vault and guarded. Does that sound quick, cheap, and easy? No. It's slow, it's expensive, and it's very dangerous. The plane could crash and sink to the bottom of the ocean with $1 billion worth of gold bars. Oops. Okay? A lot could go wrong. Or you can call up JP Morgan, or you can go to the trading desk at the New York Fed, or go anywhere you want and say, JP Morgan, hey, this is the central bank of blah, blah, blah. We would like $1 billion worth of 10-year T-notes. Okay? Okay, do you want fresh cut or seasoned? We're fine with seasoned. What maturity date would you like? Do you want 10 years, 9 years, 8 years, 7 years? How much time would you like on that? Oh, somewhere between 8 years left and 10 years. Okay, that's really good. All right, we'll do it. We can get you that. And it's done. And now, do you even get a physical 10-year T-note? No. They just give you some ones and zeros and it goes into your account. Now you own $1 billion with the 10-year T-note, and it might take, 5 minutes. Okay? Okay. Okay. So this is what I'm getting to. Somebody significant is buying the treasury market. And what kind of currency do you need to buy the treasuries? See, if it was as proposed by, I won't say the media outlet, but by the journalist major that told me this morning that hedge funds are short squeezing the treasury market. I'm like, well, that kind of sounds a little bit dumb. Okay. And she probably talked to a couple of hedge fund managers who she's in contact with as a reporter, and they might actually be doing it, but they're not moving the market. But when I look at this and say over the last 5-day period, okay, let's just isolate the last 5 days now. Okay. I say, okay, stock market's going up, VIX is falling, risk on. Yet, 10-year T-note yield is down, and the dollar's up. Wait, that doesn't make sense. So the way I'm making sense of this is the stock market's up, VIX is down, but dollar's strong because somebody outside the United States, not a little hedge fund on Wall Street or in Connecticut, okay? Some big institutions outside the United States of America are buying dollar to buy U.S. Treasuries, and we're seeing this by yields falling while the dollar is rising. They're buying so many that they're actually dropping the yield. Is it ECB? I don't know. Is it RBI? I don't know. Is it China? I don't know. Bank of Japan? I don't know. Doesn't even matter. But I'm taking it through a little bit more of a thought process than the journalist major. Cool. And that's what I want to share with you today. How do we break this down? Okay? How do we break it down? How do we think about it? Cool. Nice. So I hope you appreciate that. Would you click the like button? Coolio. Let's take a look. A lot of chatter about Bitcoin. Once again, can anybody figure out why I bought Bitcoin? Let me simplify. Monthly M2. What's my target on Bitcoin? Currently $62,886.85. Actually 84.5 cents rounded up. Right on, Gary. Can't wait to party with you, man. Big party at Gary's house. It's going to be killer. Just hide your roosters. Gary's a killer. Cool, right? You see? It's right here. Exactly. Exactly M2. So, does it mean, for example, we are going from here to here? Well, I have no idea where we're going. Pete says shorts are at all-time high. Well, that's called resistance, so of course. Okay. So everyone's sitting around waiting for Elon Musk to save them. Save me, Elon, save me. Now they feel like they're out naked, floating around the Bitcoin universe without someone to manipulate the market. I just bought it because it's the monthly M2. So I can't lose money. Pedro says Elon will only save them if he buys them first. No, I don't believe that. I think people will just do it because they think Elon did it. Not that Elon actually did it. They'll do it because they think he did it. Oh, he sent an emoji. Oh my God, I got to buy Bitcoin. Invest my life fortune into Bitcoin. Got to get rich quick. Well, some people did. Some people did. So it can be true. I just bought it, and I cannot lose money on it, so I feel pretty decent about that. Right on, Hassan. Out in Fort Worth, huh? Texas. Nothing in Texas but queers and steers. What do I think about El Salvador news? Never really thought much about El Salvador before. So El Salvador says, yo, we can't manage a central bank, so we're going to use crypto instead. Okay. Sort of like Venezuela. Yeah, okay. Well, all I can say is I wish the good people of El Salvador the best of luck, and I hope it works, and I hope it's better. When I look, one of the things we looked at recently in the macroeconomics class, I think it was, anyways, we looked at the per capita GDP of El Salvador, and when you do it that way, I don't know if it would be even meaningful to Bitcoin. But I don't know. It might be interesting. It's an interesting experiment. If the local currency, see here, what happens is typically a very, very poor country with no assets and no real reason for foreign investment, to pay the bills, they just print money, literally print the money. Wait, Moreno went ape crazy on the language? Really? In that case, going with Bitcoin, you can't just, okay? So I don't know what she said, but I guess apparently I might have struck a chord. So hear me out anyways. If there's been a failed currency regime because of manipulation such as printing to pay for debt, well, Mark, the United States has assets. So if El Salvador doesn't have any assets and generally no taxation base, all right, then, you know, you can't compare the two. So anyways, what I'm suggesting is if there's been a problem in El Salvador of low productivity and high inflation, which of course makes no sense, clearly a sign of malfeasance, then if you move over to use cryptocurrency, whatever it be, in this case Bitcoin, you cannot print more Bitcoin. You see what I mean? It's part of Bitcoin. You cannot print more Bitcoin. So the government will have to come up with new ways to do what it needs to do. So I don't know. I don't know what that's going to happen, but again, just look at the per capita GDP of El Salvador, and you'll say, okay, all right, they're doing something, and they need to do something, but ultimately on a global scale, El Salvador isn't going to move the needle. But hopefully they get their stuff together, right? Hopefully they get their stuff together and improve economic conditions. Okay? Nicaragua is doing a lot in the cigar world. They're producing some of the finest cigars, but also the amount of Nicaraguan cigars has probably gone up 1,000-fold in the last 10 years. So Nicaragua is doing something. I don't know if that's enough to save the economy, but I didn't know much about what to do in Nicaragua before cigars. So maybe there's something going on there. I don't know why El Salvador doesn't have cigars. So I don't know what they do, but they need to do something, right? Darko says they can be mined. No. There's a finite amount. Okay? There will be a day where there will be no more mining. There will be no more Bitcoin. There is an end. There's an end date. Okay? There are timers that can reasonably predict when we run out of Bitcoin. Okay. Okay. But we'll still need proof of work, though, right? To confirm transactions. But there just won't be new Bitcoin. Okay. You cannot make more gold because gold isn't even from Earth. Okay? Gold was created in the process of stars exploding. Much in the same way when a star collapses, it's when the metallic ingredients inside of a burning star, okay, when the gravitational forces start weakening inside of the burning star, it weakens. Gravity will weaken, which means these elements that are stretched apart will suddenly kind of float together, and all of a sudden, in a split second, there won't be enough energy inside the star to hold all these elements apart, and they'll collide, and in 1/1000th of a second, the star turns into a solid iron magnet. Boom! Wow, the amount of energy that's released is ridiculous. Well, in the birth of a star, you have to understand it rips all these elements together, right? Iron ore goes there, right? Iron ore goes way over there. Wow. And gold, XAU, goes over there, and it's just thrown out into the universe. That's where we get gold. So there's only a certain amount of gold on Earth and no more gold. Therefore, right, you might be able to go somewhere on Earth and dig, and maybe find another ounce, but at some point, even mining won't even be worth the money anymore. Okay. I heard, though, somewhere that for every square mile of the ocean, there's $1 million worth of gold floating in the water. It just costs $10 million to get it. Anyways. Okay. So let's move on.com. Happy Friday, by the way. You feeling good? I had a margarona yesterday, but I don't think they put any booze in it. And I was quite sad about that. Okay. XAU XA me, XA together happily. And what I was suggesting here several days ago is that we're in the middle of the range and you probably shouldn't be trading it. So let's just follow that thought process, okay? Why should you not be trading it? Because there's no trend. So what do we know? What can we know? Okay, I could have told you last week, buyers of gold would buy it around 1,873, and sellers of gold would sell it around 1903. Okay, or you just say, buy it at 1875, sell it at 19. Cool. No market. It's not any more complicated than that. And that's why the message way back on Monday or Tuesday was, this isn't really good for trading, especially if you're a bull. Because I'm a bull, right? So I have to point out situations where you see this, you see this, you see this, you see this, and now you should stop. Okay. And the way I look at it is, if you're a bull and you know how to trade, you're all right, but you're not happy. If you're a bear and you know how to trade, you're in, you're all right, you're not happy. Maybe you're happy. But for those that don't have patience and discipline, you're being destroyed no matter what you're doing. Because you're buying late and paying the penalty. You're selling late and paying the penalty because you're not making a declaration of war. You haven't picked a side. Okay? So again, the way I teach you is, this is a bullish entry. So you bought it. This is a bullish entry. So you bought it. There hasn't really been much else to do. Maybe you bought this. Maybe you bought that. And those are all getting knocked out at break even. Yeah, it's a tough gig. I was a currency trader once, right? No, there's no need for alcoholism. You play some trades, they didn't work out. So what? But generally speaking, you're hanging in there. It's all right. You're waiting for the Fed meeting. You're just hanging around. Hey, maybe it'll work out. Maybe I'll stay in this. Okay? Okay. Oh, are you guys arguing over when we'll run out of Bitcoin? Well, technically speaking, it gets exponentially. Actually, you know what? Oh, we got in an argument. Not exponentially. Exponential, polygraphically, exponentially, polygraphically. It's not exponential. It's, I think, the square root of n. But anyways, what I'm saying, whether it's exponential or polynential, I don't know. You have to get into your math. Asymptomatically. No, not logarithmically. I think it's to the square root of n growth. Polymer. It's not plastic either. Okay. It's very difficult, and you never quite get to 100%. So, for example, I'll say by 2040, we will have 99.5% of all Bitcoin. By 2050, we'll have 99.9%. Okay. By 2100, we'll probably have 99.999%. Okay. So you could argue it's going to take 100 years. Peter says the halving is every 4 years. Yes. Yeah, but Olin, how do you say polynomially? I guess is what I'm looking for. versus exponentially. Okay. But anyways, Peter's like, hey, no, the halvings every 4 years. But it's also the difficulty in which you solve the puzzles. And it's not exponential, although it'll look like it, right? It'll look like this, and you'll say that's exponential growth. But it looks like exponential growth, but exponential growth goes like, I think exponential growth will go like this, where polynomial growth will go like that. There is a mathematical difference, to which is meaningless, right? Let's see if I can find it. Exponential versus polynomial growth. And exponential growth is bigger and faster than polynomial growth. That means that no matter what the degree given on the polynomial, the given exponential function will eventually be bigger than a polynomial, which I just told you. Okay? So we had an argument in class about this, and someone was like, it's not exponential, it's polynomially. And I'm like, what the fudge? So the difference, where's a good example? I mean, they're all examples. But you see, it's n to the square or the square root of n. Is there a good, no, x. Look at this. You can do the slope and the intercept. So you can do this with calculus. Is there a good, none of these I find satisfactory. This is probably closer to it. La, 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 la. I don't see anything sort of satisfactorily explaining it. Time complexity with Python, great. This goes to Metcalfe's law, I guess, is what I'm thinking. Not Moore, but Metcalfe. You remember Moore? Moore's law? Metcalfe is the Ethernet guy. Metcalfe's law. And yeah, so what you're saying here is when you're looking at the network effects of so what they're showing, the polynomial growth. All right, so the math has to do this. You have 4 nodes, okay? 4 people doing Bitcoin, okay? Early days of Bitcoin. How important is it to add a 5th? How much better is the network for everyone if a 5th user shows up? Okay? And then how much better is the network when a 6th person shows up? Okay? And it's growing at a square, but not exponentially. Okay? So you might, I don't know the math, and I know it's easy math, but it's hard doing a webinar and stuff. But imagine this is 20%, but then you add this, and it's 60% more value for everyone to have more people using the network. Okay. So, anyways, Peter's like, that is halving. Yeah. Well, I think there's something else then that I'm missing, but yes, there's a point where you don't ever quite get there. Is what I'm trying to say. Mr. Kennedy says, but if you keep growing, you reach critical mass where supply is greater than demand. like, I guess maybe it's like one of these things when everybody on Earth uses Facebook. Facebook will have to explain why there's 27 billion more Facebook accounts than there are people on Earth. Okay. Okay. Am I talking about Einstein? No, Metcalf. Metcalf was talking about the internet. And before there was the internet, I mean, there was always internet for military and some other things. But Bob comes along and he says, let's build an intranet. And on this intranet, you can connect computers, printers, servers, routers, whatever. And you connect them with wires called Ethernet, RJ45s, right? So you connect all these things on your twisted pair RJ45 Ethernet cables, and you need to buy some 3Com tools to do it. But what he was saying is the more you connect people in your company on this intranet, the more valuable it becomes, because now everyone can talk to each other, everybody can share files, everybody can print, everything's super easy, everything's super fast, okay? And then, of course, one day you were able to break out of the intranet and also add internet, and then we got rid of intranet because now you can just have internet and then secure it. And so, again, I remember the first time I saw email. I can tell you exactly where I was. And my friend was a computer scientist, and he was showing me email. And, you know, the more people using the internet, the more valuable the internet becomes. And so Metcalf, right, you might know Moore's law, which has to do with the processing power of a semiconductor. That's Moore. This is Metcalf that talks about the network itself, the value of the network. Okay. Now we talk about, like, if you go to business school now, they want to talk about the network effect of everybody on Earth uses Google except for China. Right. Everybody in the United States uses Google. Therefore, everybody in the United States uses Google. If all companies use Windows machines or Microsoft Office, then they're all going to use Windows and Microsoft Office. If everyone uses Facebook, then you sign up for Facebook because everybody you know is using Facebook. You don't like Facebook. You don't want to use it. You don't even understand it. But all your friends and family say, how come you're not posting pictures on Facebook? How come you never update me? How come? And you're like, oh, dang it. Okay, I'll sign up for the freaking Facebook. Okay. And there's a network effect. Suddenly you have to use Facebook because everybody you know is using Facebook. But the only reason the other people are using Facebook is because everybody they know is using Facebook, and everyone stares at each other like, this Facebook thing sucks. I hate it. It's stupid. But everybody I know is using it because everybody they know is using it. Okay. So now you see, and so anyways, it's not exponential. It's polynomial growth. Google it. Have fun. Right. Okay. Let's just, I don't know. What do you want to do? Let's go back to the indices, see where we stand. Not good, not good, not good. Well, let's just look at Kitty Cat. I'm happy with Kitty Cat. Come on, Kitty Cat. So let's isolate Kitty Cat. And we are still stuck here. Do you remember this analysis? Wait. Okay. My message over the last week or two was be prepared, be ready, willing, and able, but also be patient, be disciplined, know when you're wrong, wait for the setups. one of the things we talked about yesterday is in your time of indecision or in your time of loss of conviction, instead of continuing to trade out of frustration or out of emotion or out of desperateness, go back and do the homework. Okay? Go back and do the homework. Figure out if you're wrong, find out why. If you're not wrong, then wait. And here we are running into the Fed meeting, and that's kind of cool. Now, one reason for consolidation is no one really knows how the other person's going to react. So they're either waiting or they're counteracting each other. Some are buying because of the Fed meeting, some are selling because of the Fed meeting. And there's lots of in between, and ultimately what happens is nothing happens. We can try to throw in, I don't know, you want to throw in some volume? Okay. And volume is what? How would you describe volume? It was high and has been getting lower. I know it's difficult to see. Delete. But from here to here, volume is falling, right? Okay. High volume here. Okay. Hey, you know what? Let's do something. Let's just do something random here. I'm going to move these. All right, let's move these. I just want to see if we can learn anything about timing of this pair. Is there a pattern? I'm looking at peak volume here. Big peaks. Wouldn't it be great if it was the same day of the month? Not really. Seems like a lot of the volume, the spikes, happen near the beginning of the month, doesn't it? But not much going on here. Since about the 1st of May, it seems, it's hard to see, I know. Let's do it this way. Okay, there's a peak here. Is it higher than there? No, it's about the same. Notice it's okay, right around the beginning of the month. All right, so last kind of spike was down here. I don't know, nothing really going on. But it seems to me right now, if we were to draw this as a trend, okay. So, great chess match going on. The battle is on, everyone setting up at the... No, actually nobody's battling. So maybe that's another wake-up call. Why are you the only person trading? Look how low the volume is so far today. Just very, very, very low. Below average, at least, I'd say, right? Okay. Kind of interesting, right? Just a sort of a thought process, too. How about Kitty Cat Yen Yen? Let's take a look at its volume. Okay. Now, according to this, looking at 4 hour, is it plausible that there are certain times of day to be trading this that are better than other times of day? Look at this. Right? It's like a clock. Look at the volume spike. What do you think of that? A little low that day. Looks like there's about 2 hours every day that are most meaningful to the price discovery of this currency pair. Wowzer, huh? What do you think? Hold control and then drag your lines over to clone it. All right, let's try that. And I have to double click it first, though. Huh? Yeah, thank you. Yeah, okay. See, we don't have the big spikes that we've been having. But anyways, let's just get rid of it then. Okay. Let's just see if this does anything. Wowzer, up. Somebody bought it. Somebody sold it. Somebody sold it. Somebody bought it. Somebody sold it. Then there was sort of a dead in the middle, so not a lot happened. Then maybe somebody sold it up here. Interesting, right? This looks like it's off an hour or so. I'm just looking at the volumes at the bottom of the chart. Cool, right? You can almost see it building up. 1600, 1700, 1700, 1700, 1600, 1600, 1700, 1700, 1700, 1700. Holy shit. Did we just find something? Kevin just choked on his cereal, Jim. spit cereal all over his keyboard. Yeah. What time is it now? Ooh. It's going to be 1700 soon. I don't know. Do what you want to do with the knowledge, yo. Free country. Let's see if you were a bear. Okay. Seller. 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 If you play Minecraft. Cool. All right, you have to click the like button, the thumbs up button for that. Come on. Dude, seriously, let's go. Click the button. Come on now. Yeah, well, that's when the volume seemed to appear. But to me, it doesn't matter. To me, it doesn't matter. Because if you're a bear, you're like, hit the pivot, hit the pivot, hit the pivot, hit the pivot, hit the pivot. And you're like, oh, perfect time of day and everything. Boom, hit the pivot down. Yeah. Okay. Now, here's the thing. People that chase this, they're going to buy it here because they're wrong. I don't know. A bear every day is waiting to sell. And they're like, oh, dude, did you just hit my pivot? You're so dead. You're so dead. You didn't just hit my pivot, did you? Oh, sell. Suckers, right? That's how you should be thinking. Now you're walking into, it's 1600 and you're like, all right, I got to get ready to sell. How about off this top? How about off 90.5? All right, take a shot. See how it goes. Should work out all right. Okay. Okay. Cool, right? It's just sort of a wake-up call. All right, well, that's interesting. Cool. Peace on earth. May the pips be with you. May our profits be above average. Have a nice weekend. Bye.